AI is a bubble, Britain is broken, and Bitcoin is dead.
I think it's all bullshit.
You are all doomed! Hear me!
People have been going much further, some people calling it a Ponzi scheme. Does that accusation have any merit?
Like all good myths, there are strands of truth that the myth is built around.
The story right now is simple. Britain is broke, and Rachel Reeves has got no choice but to hike taxes hard.
None of that is true. Not one element of that question is true. That's what's in the media all the time. A bet on the price of Bitcoin or any other cryptocurrency is much more akin to gambling than it is to investment.
Welcome to Noise Cancelling with me, Jon Adair, and Neil Woodford. Neil, if you believe the headlines this week, you'd probably sell your AI stocks, dump anything British, and never touch Bitcoin again. Are the doom-mongers right this time?
No, they're not. Certainly they're wrong about AI, and they're certainly wrong about the UK economy and the UK stock market. Whether they're wrong or right about Bitcoin, I'm not sure. I've never really understood Bitcoin. So the correction in the value of Bitcoin and other cryptocurrencies is something that I'm struggling to understand. But then again, I didn't understand why they went up so much either. So that's a bit of a mystery to me. But certainly from my point of view, AI is absolutely not in the same camp, and neither is the UK stock market or the UK economy. Markets love a doom story. The media is absolutely rammed with people with an opinion about how the world is about to come to a shuddering end. And I think it's all bullshit.
Before we find out whether it is or not, and before we dig into each of those topics, let us know in the comments which of the three worries you the most: AI, the UK economy, or Bitcoin. But Neil, let's start with AI. First, a yes or no answer from you. At today's prices, is AI a bubble?
No.
People have been going much further, and some people are calling it a Ponzi scheme. Does that accusation have any merit?
No, it doesn't. No. It's a ridiculous accusation. Like all good myths, there are strands of truth that the myth is built around. But to suggest that the AI industrial revolution is some kind of Ponzi scheme, or that the businesses within it are engaged in some kind of Ponzi scheme is ludicrous.
So Ponzi may not be the right word, but there are circular trades going on between these companies. Is that problematic?
Yeah, I think, and that's inevitable. I mean, Jensen Huang was talking about that today, last night in the US, following the quarterly results, which were better than expected. He was talking about the importance that he sees in NVIDIA having a relationship and investments in many of its customers. As bright and as smart as he is, he doesn't have perfect vision, 2020 foresight, if you like, on who's going to win in this particular industrial revolution. There may be more than one winner. There may not be. Who knows? We just don't know yet. But it makes sense for him to invest, I believe, in his customers. I think there's a vested interest in him investing in the customers that will continue to buy NVIDIA technology from NVIDIA.
So if it's not a Ponzi scheme, what is the real risk here? Is it that the profits never justify the spend, or just that investors are paying the wrong price for the right story?
I've been saying for a long time that the valuations are excessive. But there's a world of difference between excess valuation and the sort of thing that I think people are talking about when they talk about a bubble. Immediately, as soon as you use the word bubble, then of course you're conjuring up the sort of the bursting thing. In other words, it's a bubble and it's about to burst, and therefore it's going to be a catastrophe. And of course, most of the commentary then talks about, how bad will the aftermath be? It'll drag down the whole economy. Banks will go bust. We'll all be living in caves. I'm exaggerating, but you've heard it all. It's deliberately designed to sort of scare. I've been saying for a long time, I don't understand the valuations of the leading AI players. I can't really rationalize them, and I think they are predicated on the sort of success that I find it hard to imagine is a possible outcome for all of the large players. But there's a world of difference between me saying I'm not sure I can rationalize these valuations and the world's about to an end, the AI bubble is a Ponzi scheme, etc., etc.
Sundar Pichai, who's the CEO of Google Alphabet, he said recently that no company would be immune if the AI bubble bursts, which implies that we should just dump all of our equities?
I'd love to have a conversation with him to try and interpret, what did you actually mean when you said that? I mean, there are also little sound bites, I think, where people say, aha, of course, he's a very smart guy and he believes that this is a bubble. I don't think for a minute that he thinks that this is some sort of bubble that's about to collapse. It is absolutely true that there are bubble-like characteristics, as I've said all year, in this phenomenal AI industrial revolution. And it would be astonishing if there weren't.
Where in your mind has the market genuinely lost its head?
I really wouldn't put it as sort of strongly as that. I wouldn't say that the market has lost its mind. I think there is an understandable and rational level of excitement around what AI can deliver. Let's remember, I mean, I don't know how big AI can become, but I listened to Jensen Huang this morning, and he said he was talking about OpenAI and some of the other leading AI companies. And he said, these are the most consequential companies in history. And I thought that was particularly telling coming from the CEO of arguably the most consequential company in history. It's the biggest company there's ever been. It's got a market value as big as the German economy. It's a huge business. And yet he described his customers, essentially, these AI developers, as the most consequential businesses in history. And I think I sort of agree with him. We don't yet know that's definitively, history will judge, but I think it's a very interesting comment. And when you think about how AI is going to affect every human being in every developed economy around the world, frankly, and maybe even every human being in the developing world too. No technology, no industrial revolution, nothing has ever come close to doing that. And we haven't even really started yet. The AI industrial revolution is really in the foothills of what it can potentially achieve.
On the other side, where is the doom in completely missing the point? Do you think there are still some parts of it that are mispriced on the cheap side?
Yes, I do. Yeah, I've talked about the picks and shovel suppliers to the AI industrial revolution, and I think there are lots of them. I think you've got to be a little bit imaginative about how AI is. It's interesting, isn't it, that in the initial sort of euphoria, a very small group of companies were seen as the only beneficiaries of this industrial revolution, and then gradually people became aware. Oh, hang on a second! It's actually affecting this business over here and this business here. So, in particular, Micron and SK Hynix, for example, have only really started to perform in the last 12 months, and they perform very well. But their valuations are still pretty low, in my view. In fact, remarkably low in some respects. Remarkably low. And there are other businesses in the semiconductor industry, which I think the AI industrial revolutions will ripple out across their business. So Infineon, for example, reported recently about its technology and how it was seeing a substantial increase in demand for its chips that are deployed in controlling power supply. Interestingly, that part of its business is seeing huge demand growth from AI infrastructure spend. So, these are not the most obvious beneficiaries, but looking behind the sort of scenes, if you like, in the listed population of companies, you can find all sorts of businesses which are going to see significant benefits rippling out from AI infrastructure spending, and which are not priced to benefit from that. So, that's where I think it's interesting. So for me, the AI industrial revolution rolls on. I think if anything, it becomes more and more influential. But my fundamental investment approach is I can't justify the valuations. I don't understand the valuations of some of the leading players. So look elsewhere to find businesses that will benefit where the valuation doesn't reflect the benefits that will accrue to that company as the revolution sort of ripples out. And for me, the opportunity cost of just doing the easy thing, which is buying the high profile businesses, is high given the opportunity set that exists elsewhere.
Well, let's bring this back to what you actually do. What changes have you made in the W 4.0 strategies because of AI in the last few months, if anything?
Well, I haven't really changed anything. The successful positions that have performed well this year, I'm obviously very focused on how well they perform, but also obviously keeping track of valuations. And what's noticeable is that for a lot of these businesses, forecasts have been increasing significantly. So SK Hynix and Micron in particular have seen significant upgrades through the year, and I think we'll continue to see upgrades.
And if you want to see exactly how Neil's built his strategy, W 4.0 subscribers get full access to all of the strategies, how they're allocated, as well as Neil's monthly decision-making process. But Neil, for someone watching this who owns a bunch of AI-exposed stocks and might be spooked by all the talk of a bubble, what's one question they should ask themselves before they sell anything?
I think they should not be swayed by the modern equivalent of the lunatic on the corner saying the end of the world is nigh. And I just think investors need to think before they act. They need to do their research. They need to read around the subject and think about what's going on before making a judgment. And finally, they really do need to look at the valuation of these businesses and ask whether they believe they can be justified.
Well, if you're listening to this and you think the AI trade is a bubble, tell us which stock you think is most at risk and why. We're really genuinely curious to hear what you think. Let's talk about the UK. The story right now is simple. Britain is broke. There's a huge black hole in the public finances, and Rachel Reeves has got no choice but to hike taxes hard next week. When you look at the numbers, is that story broadly true or wildly exaggerated?
None of that is true. Not one element of that question is true. I can see why you've asked me that, because of course that's what's in the media all the time, but none of it is true.
Everyone keeps using this phrase, the black hole. What does it actually mean in practice, and how much of it is just clever branding for higher spending and higher taxes?
There are things about the fiscal challenge that the UK confronts right now which are the product of choices made by this government. They inherited a significant increase in government spending, which was the legacy of the pandemic and the legacy of the war in Ukraine. Those two events cost the best part of, 400 billion is the rough estimate. I think it's probably more than that, but 400 billion pounds, maybe more. It's also clear that when you look at how government spending has evolved, what you saw was a ballooning of government spending through this period, but not all of it was exceptional. All sorts of measures were put in place through these two events, which resulted in an ongoing higher level of government spending. Instead of a new government coming in and saying, we've got to arrest this growth in government spending. We've got to look very carefully at what we're spending, why we're spending what we are, where is there waste, where is there excessive spending, or have we got the right incentives in the economy, the right incentives to work? Have we made it too easy, for example, for people to choose to elect not to work? Have we made it too easy for people to claim benefits? All these sorts of things. But instead of asking those questions, and instead of challenging the sort of the position that they inherited, what they then did was embark on a significant increase from an already elevated level of government spending. That was a choice which this Labour government chose to implement, and they have spent a huge. They have increased spending, have accelerated the increase in spending significantly. And as a result of that, they've had to raise taxes because they are concerned about the current level of borrowing. And as a result of the so-called fiscal discipline that Rachel Reeves has talked about, she has her ability to increase the level of borrowing is constrained. And as a result of that, obviously, to plug the gap of the additional spending, she's had to increase taxes by over 40 billion last October, and I think about 20 billion this October. In November.
When commentators talk about a black hole in the public finances, they're not talking about a missing pot of money. It's not a bill that suddenly turned up or a discovery that the Treasury's run out of cash. It's really a forecasting gap. The OBR takes the growth assumptions, tax receipts, spending promises, and projects them 5 years forward and compares that to the fiscal rules the government has to follow. If those rules say debt has to be falling or borrowing must be below a certain level and the forecast doesn't meet that target, that's where you get a black hole. So this isn't a crisis today in the present. It's a set of numbers on a spreadsheet that don't line up with a rule that the Chancellor has committed to. And the crucial thing is the gap can move massively depending on the assumptions that go into the model. And this is why, Neil, you've been talking so much and for so long all year about the importance of the OBR's forecasts. Because if they downgrade productivity or growth or tax receipts drop by a fraction, the black hole gets bigger. If they upgrade those assumptions or tweak the rules, the hole can disappear entirely. So the size of the hole tells you more about the OBR's models, I think, and the government's fiscal targets than it does about the country's actual ability to function today.
Absolutely. That's a great conclusion, John. It's important to remember that the fiscal deficit or surplus is really the difference between two very large numbers. The government is spending more than £1 trillion a year, and tax receipts have gone up significantly to pay for that. Slight tweaks to growth assumptions in particular going forward, particularly compounded over a 5-year period, will make quite a big difference. Those two very big numbers. And the difference between them can change quite significantly as a result of minor tweaks to those assumptions over that 5-year period. And that's exactly where we are. So in conclusion, I mean, the reason that I'm so aggravated about this, it is so absurd. It's hard to describe to the audience how utterly absurd what is happening in the UK right here, right now. And the decisions that are about to be taken next week will affect all of us. Not significantly, I don't believe, but will affect all of us. The fact that decision-making is the product of a fundamentally, completely and utterly flawed process is astonishing. No other country in the world does this, okay? We are alone. We're unique in this utter stupidity.
Neil, let's be blunt about the Chancellor. Does Rachel Reeves genuinely have no choice but to put taxes up?
No, maybe she has no choice because those around her have delivered. The Labour Party, the Labour government, led by Keir Starmer, has dictated what she should do. But it's the spending commitments, it's the government's choices over what it wants to spend, and its refusal to even imagine spending restraint. It is that choice that results in the higher government spending going forward. If the forecasts that I believe were the ones that the OBR was using, there's no fiscal black hole at all. There is, in fact, a surplus in 2030.
There was a bit of a U-turn from Rachel Reeves following an upgraded OBR forecast, or perhaps following some pressure on Keir Starmer. It's hard to tell. What's your take on that?
I think the truth is that Rachel Reeves, as I said at the time, had made a political and an economic error in giving that speech. I said it was a mistake at the time, and it's turned out. I think what she was doing was front-running what she thought the OBR were going to say. I don't think she'd received the final determination. In fact, the final determination of what the OBR's final forecasts are going to be is not received until tomorrow. That's the last meeting between the Treasury team and the OBR. It takes place tomorrow. That's when the sort of final numbers are sort of set in stone. But I think Rachel Reeves and the team around her were influenced by the media sort of chorus of crap that there's a sort of 30 whatever billion hole in the public finance, 35, 50 billion, as Nissa once said a few weeks ago, months ago now. I think that she was so affected by that. I think she wanted to sort of get ahead of the OBR number, if you like, and say, well, these are tough choices we've got to make, and everybody's, the broad shoulder, all that sort of horse manure again, unfortunately. And in fact, she had allowed herself to be influenced, I think, excessively by the media instead of waiting for the numbers from the OBR. So I don't believe the OBR has suddenly shifted its position. I think the OBR basically hadn't given her the numbers yet. Anyway, when she did get the numbers from the OBR, the black hole in 2030 wasn't as big as the media had been telling her. And that's why the increase in income tax and the decrease in employers' employees' national insurance, which would have affected basically the self-employed and income from assets, and would have raised about 6 billion quid, was not required. And I think because Keir Starmer was so discombobulated by his ludicrous attack via his chief of staff on West Streeting, and because West Streeting responded so cleverly to that attack, and he made Keir Starmer look ridiculous, West Streeting sort of dealt with it really, really well. And as a result of that, I think Keir Starmer felt even more weak, and he knows there's a lot of pressure on the backbenchers. He knows that there might be a challenge to his leadership. So I think he sort of said, well, we're not doing that. We can't do that. For political reasons, the line went through that shift, which Rachel Reeves had clearly expected to implement. She then blamed, of course, this, the OBR have changed their numbers. They hadn't changed their numbers at all. It was a political decision. What it coincided with was a lower black hole number from the OBR than she was being told. So it was a convenient coalition, if you like, of things. Anyway, either way, it's embarrassing. The whole thing, the whole process is ridiculous.
Neil, here's a slightly selfish investor question. If Reeves does raise taxes next week, what actually changes for an equity investor in the UK? Is this a slow headwind or something that genuinely destroys value?
I've been saying that the budget doesn't change, really. Doesn't change my own expectations of the economy this year or next year, indeed, or the year after. It doesn't. There are other more important things that are happening that will dictate the outcome and trajectory of growth in the UK economy. The budget will be forgotten quite soon. But that doesn't mean that it hasn't been damaging. I think it has been damaging. I think it's created a lot of uncertainty. This absurd process that we are subjected to as an economy, where it takes 10 weeks for the OBR to update their forecast. I'm trying to use a polite word. It's an omni-shambles of nonsense. I mean, no other country does it like this, okay? This is uniquely ridiculous. And it should come to an end. And this should be the last time we're subject to this nonsense.
You've been arguing all year that the UK market is cheap and full of opportunity, while others have been calling it uninvestable.
Yeah.
Are you just looking at different data, or is everyone else refusing to do the hard work?
I just think people are in a sort of doom loop. I don't think they're doing the work at all. I just think they've decided that the UK economy, the UK equity market is a basket case, and they just don't want to be involved with it. And as a result, they've missed out on a 16% plus gain in the FTSE 100 index this year, which are leading Eurostoxx, leading Wall Street. Yeah, so I read today as well. This year so far has seen a record domestic investor outflow from the UK equity market. £26 billion has been taken out of UK equities this year, which is a record, and the year's not done yet. I mean, it's extraordinary. I mean, you think, how the hell could the UK market be the best performing global index? Well, developed index. I mean, Hong Kong's done better. How could it have achieved that against that sort of headwind? And it is a remarkably good performance. And it sort of reinforces what I've been saying, which is valuation will drive. It is the key factor that will drive the UK market higher, and it's depressed valuation relative to its history and relative to its peers, combined with a better economic outcome, growth outcome this year and next year and the year after, in my view, are the factors that will drive the market, the economy into sort of sunnier uplands. Just for the record, I think growth next year is 2%, maybe higher, and I think it strengthens in 27. And remember, the key driver really is consumption growth in the UK economy and investment spending. And what the sort of the key behind that, I suppose, really is lower interest rates. Less saving, more spending, really, in the UK economy. It's pretty simple.
And again, Neil, let's translate this into action. Where is W 4.0 currently taking advantage of all this pessimism about the UK? And what would have to happen in the budget for you to rethink that?
UK companies, the ones that I really like, are well represented across three key strategies. So across all-rounder, across income booster, and in Neil's top 40. And that orientation has played very well this year, and I believe it will play well going forward. Examples of the companies that I think will continue to do really well and have done well this year would include banks, for example, and Barclays would be a prominent feature, and will continue to be a prominent feature going forward, as are the other two UK domestic banks, Lloyds and NatWest. Away from the banking sector, there are other companies in the mid and small cap, so builders, house builders, building materials companies. So house builders like Persimmon, for example, companies like Breeden and Marshalls, for example, are the sort of building materials businesses that I think are really well positioned to benefit from recovery in that part of the economy. At the moment, of course, things are pretty depressed, but I believe that with lower interest rates, there will be a significant recovery going forward.
And anything in the budget that would cause you to rethink that?
No. For me, the budget is another missed opportunity. The budget is, for me, the absence of good news, not bad news. It's a missed opportunity. The government could be doing something to help the economy. Instead, it is hindering the economy. But the quantum of that hindering is massively outweighed by the underlying recovery forces and lower interest rate impacts that will drive the economy forward. So just to put that into context, a 1% fall in the savings ratio. But if the saving ratio halved, it would be broadly in line with where it's been in the long term. And if it halved, it would add over £100 billion to consumption in the UK economy. That puts into context the sort of 20 or so billion increase in taxes that we're likely to see in this budget. But remember, this is not a fiscally contractionary budget. It's a budget that is just taxing people more highly.
Well, next week we'll have the actual budget in front of us. And of course, Neil will be getting your reaction. If you want to make sure you hear that reaction in real time, make sure you're subscribed to this channel. Neil, let's finish this week's episode with Bitcoin. After the latest sell-off, one camp says that this proves it was all a scam, and the other says that this is your last cheap chance to get in. Which one is closer to the truth?
On this occasion, I'm probably going to err on the side of the bears rather than the bulls. I've never understood Bitcoin. I don't understand what cryptocurrencies really do. They're not a store of value. It's not. I don't really see it as a financial asset. It doesn't really pay. There's no return from your investment or from an investment.
But lots of people do call it a store of value and treat it as such. Why do you say it isn't?
I've asked myself this question. What does Bitcoin actually do? I mean, to me, the price of Bitcoin is the product of what somebody else is prepared to pay for it. I think Bitcoin has many of the hallmarks of a Ponzi scheme, rather than AI. I mean, it's much more aligned with a Ponzi scheme than is the AI industrial revolution. Some people have, ascribed the benefits of crypto as, a place to hide money, to a place to sort of to disguise yourself from the authorities. I mean, and it's clear that lots of people who believe that their financial circumstances should be hidden from the authorities, do use crypto. So I mean, it does have some utility in that respect, but I'm not sure what it delivers that you can't get from conventional currency. It's not a medium of exchange in the sense that currency is. that conventional currency is. People talk to me, well, you can buy certain luxury items with crypto, but I mean, I can't go down and buy a pint of milk with crypto today, endorse it, and that's not going to be possible. What's it for? I've never really understood that. Maybe that's just my ignorance, but I just don't get it. I think it's, I'm very much in the Warren Buffett camp on this, and I wouldn't be surprised if it went to zero.
If Bitcoin were to go to zero, what do you think would actually cause that?
More sellers than buyers, just as more buyers and sellers have driven it up. How can you value Bitcoin other than by reference to its price? How can I value? What objective measure can I deploy to value the utility of Bitcoin?
There's a similar question around gold, I suppose. Gold is a recognized store of value.
Yeah.
But it has similar characteristics. It's only worth what it's worth because people want to buy it for that price.
Yeah, but it is a rare commodity. It is. I mean, more gold is found every year, but the world has valued the store of value of gold for thousands and thousands of years, and I understand the concept of its store of value. It does have alternative uses, of course, in terms of jewelry. Jewelry demand is one of the most important drivers of the gold price, by the way. It has uses in medicine, not least in quantum computers. All sorts of things use gold and use its inherent properties. So there are alternative uses for it. But I understand that has a traditional role as a store of value, as an inflation hedge. But equally, I've only ever seen it as that. And frankly, the real economy is a much better inflation hedge than gold, because the real economy, represented by companies that you can invest in that pay you a return, are a much better inflation hedge than gold, in my opinion, and have consistently been throughout the last 50 years of my career. Well, not for 40 years of my career.
So has the Bitcoin experiment failed, or is this just what this asset does every few years?
I said something quite extreme, which is I wouldn't be surprised if it went to zero. That would require a massive loss of confidence in it as an instrument. And I think there are enough people around the world who still believe in it, who believe in its sort of ethereal sort of, attractions, to mean that is a highly unlikely outcome. But equally, it could halve, it could go up. I mean, it's an incredibly volatile instrument, isn't it? Its track record over, although it's outperformed the S&P 500, it's been incredibly volatile over that period of time. Maybe what I'm just voicing is my ignorance. I just don't really understand it, and I can't value it. I can't value it by reference to anything independent, other than by reference to its price.
And I suppose because of your valuation-led principle, if you can't value it or understand the valuation, you can't invest in it.
No, exactly.
So what is the difference between someone who claims to be an investor in Bitcoin or crypto and someone who's gambling?
There's no difference. It's exactly this. For me, a bet on the price of Bitcoin or any other cryptocurrency is the equivalent of a gambling on a horse race or on an electronic sort of roulette or anything. It is much more akin to gambling than it is to investment. Investment involves making judgments about the utility of whatever it is you're investing in, and making judgments about the return that you can achieve from it, whether it's an income stream or share of profits or share of cash flows, those sorts of things. So some tangible physical return to you as the investor. Other assets provide utility. I mean, my house doesn't pay me an income, but it provides me with shelter, those sorts of things. But I'm not sure that you could categorize Bitcoin as anything akin to that. It therefore looks to me like a bet on somebody coming along tomorrow and buying it at a higher price than you've just paid. Now that to me is much more akin to gambling than it is to investment.
Well, let's compare the doom stories that we've talked about today. Does the doom around Bitcoin feel more justified to you than the doom around AI and the UK? Or is it exactly the same emotional pattern, just playing out in a different way?
I just see it as slightly different. People get very excited about Bitcoin when it's gone up, and they get very, very gloomy about it when it goes down. It's like a gambler. You know, if you're on a winning streak, you're naturally inclined to think, well, I'm on a great streak here. I'm going to start betting. You know, my bet size is going to go up. I'm going to put it all on red. Similarly, if you've been on a terrible losing streak, suddenly your confidence and maybe your resources run out. And, you know, there are all sorts of people who've got leveraged bets on Bitcoin who are sort of licking their wounds at the moment. So I think it's quite a different sort of sentiment to me. It's all about the direction. Enthusiasm when it goes up, and abject sort of disappointment and sort of depression when it goes down, which tells me really people have got no idea about intrinsic value. On the other hand, all of the sort of nonsense that's being talked about AI or about the UK economy, about the UK market, all of that is just sort of, you know, for me, I think it reminds me so much of the latter day sort of electronic equivalent of the guy on the corner on Speaker's Corner, you know, maybe 50 years ago, walking up and down, waving a Bible in the air, saying the end of the world is nigh. And I'm vaguely amused by that.
So for the viewer who's got some Bitcoin and might now be staring at a red screen, what are the questions they should ask themselves before they either double down or bail out?
What do they think they're investing in? What is it that they think will drive the value of Bitcoin up? Or do they just think they're smarter than everybody else, and that they think that somebody else will pay a higher price than they did tomorrow? My guess is that when you ask yourself that question, the only thing you're left with is, are there enough people out there who are prepared to pay a higher price than I've just done? That's the only thing that you really need to have an answer to if you are buying or invested in Bitcoin. Everything else is a fantasy. It has no intrinsic value. So that's the only thing you need to ask yourself. And if I were asking myself that question, I'd say, well, on what basis do I think I've got superior information that allows me to make any sort of judgment about whether that outcome will occur? So that's why I think it's gambling. It's a sort of flick of a coin.
Well, Neil, we've tackled 3 flavors of doom today. AI is a bubble, Britain is broken, and Bitcoin is dead. Can you leave people with a simple checklist so that the next time they're hit with a doom-laden headline about markets, what questions they should run through before they touch their portfolio?
History, economic history and stock market history, it has an enormously important message for investors. I think most investors need to look back, say, well, hang on a second, we go back over 10 years, 15 years, 20 years, whatever. Look at what's happened and think, well, and anybody who has done that, by the way, will be astonished at how much value has been created through investing in the real economy. In other words, in businesses. I think what they need to then ask themselves is, well, has anything changed? Has anything really fundamental changed? Is the latter day sort of internet equivalent of the lunatic with the sandwich board? Have they got any insights over and above what they had when I was a little lad, at Speaker's Corner? And I think the answer to that question is no, they haven't got any insights at all. Actually, really, the future is going to look. It's going to have many parallels with the past, and if that is the case, then they should expect a balanced portfolio of undervalued equities to continue to do well, as it has done in the past.
And if you want to see how those principles show up in practice, Neil's strategies, including how he's actually positioned on things like AI and the UK economy, are on W4.0. The link will be in the description and in the show notes. If you found this episode useful, please hit like. It really does help other people find the show, and subscribe so you don't miss next week's budget special. In the comments, please do tell us which doom story you think is most overblown and which one is keeping you awake at night. Neil, thank you so much for today. This has been the Noise Cancelling Podcast from W4.0. We'll be back with a budget special next week. Until then, take care.